Hi, Samantha. I'm going to make you the presenter now. Thank you for your patience. Looking forward to talking to you again. It's been a while. I promoted you as being a very tenacious pro trader, and I believe that. And you'll see the drop-down menu, Samantha, to share your screen. And also, let's see if your mic is enabled. Your mic is on. So you'll see. Hi,
Hey,
how are you? Hi, Samantha. How are you?
I'm doing well. It's really great to talk to you as well. All right, so showing screen, which one of my monitors? That's the fun thing.
Yeah, let's see what you come up with. Pick the one that has the charts or whatever you're going to email me. That'll be the one you're going to want to show. So you just click the mouse on that, and it should come up. How many screens do you trade off of?
5.
Oh, you got a little spaceship going there. So, okay, so we got it. You're showing me LaDuc trading, volatility index. That's kind of putting in a little saucer bottom down here. So, Samantha, you know, I talked to you last time, and you did impress me with your conviction on different calls. You were right about quite a few things. So I'm assuming that you're looking for some type of low here in the VIX, and that perhaps the market is going to finally start feeling the effects of friction, trade friction, dispute, war, whatever you want to call it. So why don't we go ahead and tell us what's on your radar.
All right. First, I did put this together for you as well as clients. So happy to share that URL if folks listening want to kind of follow along. Okay. I think best by writing. So I do not have one charting platform or trading platform. I have several. So basically, I grab stuff also from Twitter. There's fabulous exchange of ideas where we found each other, right? So you've got day traders, option traders, macro, the whole thing. So I have basically assembled some charts that I think are kind of big picture, if you will, macro. And this is one in particular before even getting into the volatility picture, because it has obviously been going down of late, but I think we are kind of approaching some inflection points, or at least a pause, with probability in the past of reversing. One in particular would be the NASDAQ. So we're coming up to that 61.8 extension off the whole 2000-2002 bear market. It's coming up to about 183 in the Qs. And I've been saying for the past month and a half that this is really my price target for this grinding out higher to the S&P at 283 and the Qs to 183, roughly. They can overshoot, but I think that's a typical and high likely place for a pause and a reversal. So I'm then much more of a bear once we get to these levels, and I'm patient to wait for those levels, but it is very much, I'm going to go to rate.
Did you have a moment of doubt about your magnet? I mean, a lot of objectives and fib numbers are like magnets.
They're just tools in the toolbox. Yeah, they're just among many. I use macro very much as the backdrop. I use intermarket analysis, which this is the VXV, not the VIX, VIX. So their technical analysis for me is pattern recognition. It's study of volatility. It's helping to identify when to enter and exit a trade, but it is fundamentals and intermarket and sentiment and macro that really form a much better picture. Fib is just one tool in toolbox, but I look at basically this congruence of themes. So on the macro side, there is no question a few things going against the advance, or at least pausing the advance. We used to have the Fed put. Now we kind of have the Fed call, meaning it's capping the advance with the Fed rebalancing and gradual rate hikes.
Great term.
You know, many are saying they'll talk it back. I'll believe it when I see it. Right now, it looks very strongly all systems go by the Fed to rebalance and to gradually hike rates. We have the trade war escalation. So even if Trump is, following through on his threats and his promises, there is the response, if you will, in large part by China. And good things can happen, by the way, in negotiations. But the point is, they're playing this for real. And you can see that with the yuan devaluation. You can see that with their fear of banking crisis. You can see that with Bank of Japan also trying to fight the devaluation of the yuan. And there's like a duel right now, all to support, our market, which, thank you very much. But we have to get some real price discovery sooner or later. And there is a lot of reasons to be bullish, no question. We got 150% of US, GDP is in our stock market. There's incentive to keep it elevated, no question. But that's also where the everything bubble came from, right? It didn't get its name for nothing. So if we have some policy missteps, definitely the currency wars. And then you combine it with a fib level, right? So that's what I'm talking about. When you combine it with other technical indicators, that's when I start. Yeah. So that's when I start to really look at that.
Let me ask you this, Samantha. During after Netflix earnings came out and it came in about $50 lower, were you surprised that it recovered everything the same day?
It didn't recover everything, but I was not surprised that it did what it did because I follow unusual option activity. And let me just show you real quick, because this is, can you still see, can you see a blue screen now? All right. So every day in my live trading room, I have this particular screen open, okay? So when it touched down, intraday, you can't see it now, but in any case, 347, 348 is weekly support. So once it started to form a double bottom intraday, and it was 10 o'clock, there was a ginormous $18 million bet in the January $350 calls. That was it. It did not go a penny below after that came in. So there was tons and tons of chasing. This has August now, but this particular indicator right here, this is just option flow. Volume is today's activity. This was actually not today because we're not open. It was yesterday. But the point is, there were chasers, long and short. It all had July expiration. And then an $18 million, I'm serious about this order came in and it went up from there and it didn't stop until what, 380?
What a great trade. So ended up, they were 350 calls. Any idea what the price was when they came in with that size?
They were $39 and they went to 60 same day. So that was not just but they're still in there. So that's not done.
Yeah, it hasn't filled the gap yet.
Correct. Exactly.
I know you're big on gaps, aren't you?
I like gaps for lots of reasons because they show momentum. But yeah, that's why on the Netflix deal, its recovery was no question supported with size. Okay, so getting back to macro. We have some issues right now, obviously, with the yuan devaluation. It's a really big deal. We have a potential rate spike happening, which I really don't want to miss because a lot of people are expecting rates to actually just tumble over. And I would remind them what happened. Again, they can kind of look at this this piece that I put together for attendees. We definitely have this yield steepening, flattening, excuse me. Once, we can have a very quick, brief, if you will, rate spike, and it can cause market pullback. So it doesn't mean that we're topping as a result. You can see what happened in prior years, obviously, but I do see a situation where we have not only potential for TLT to move down and rate spikes, but then it's going to be a very big deal because this is TLT that I wanted to show. And I think I showed this to you before, actually.
You did, yeah.
Yep, it's the same chart, but obviously today, this wedge, and by the way, we have record short treasuries, as you know, record short, high yield.
Isn't that where we were, kind of where we were last time? Because we were a little contrarian then too, thinking that, you know, everyone was, one universally embraced narrative is the bonds are in a bear market, and you disagreed with it, that there's one more hurrah. Right.
And we had a bounce, but we have not had a breakout, Dale, right? So we're still turning around. And in fact, we've had, you know, what's the, I can't find it now. I'll find it. We have been sideways, obviously, with yields in that 2.8 area for about 4 months now. So it's going to move. And typically, the first move out of a triangle is the fake one. We'll see. We'll see. But I think this is going to pull back down into this wedge, give the shorts, you know, a little chance to cover. But I do see this, you know, this treasury going against, if you will, or being fueled by the shorts.
Okay, so massive short covering rally once we break out to the upside in the triangle. A little pullback here to give the bears some hope, and that adds fuel to the upside breakout. Am I reading it correctly? All right.
Exactly. So I see a little bit of a rate spike that's going to scare. TLT pulls down, and then obviously I'm wrong, right? If it breaks this trend line, but I'm expecting it to have the energy to get back up and above and go much higher.
New all-time highs or new all-time highs? Okay, so you're describing a deflationary scenario that's coming here.
I'm expecting a short covering, a short squeeze in the treasuries. So
so it doesn't have to be deflation. It could just be positioning in the market.
And we can still have, you know, this is all relative, if you will, with the indices, but we can still have a lot of currency shenanigans going on that's going to have, I think, a great impact on gold. I was very short the gold and miners into a support level for yen, and gold itself that shot through it like butter. So I was really actually surprised. I thought GLD would start to accumulate and bounce in that 120 area. It just blew through 115 this morning. So even though I can have, you know, a macro to micro trade analysis, it can still surprise big time. Now, where is it going to stabilize? Miners have actually been hanging in there really well, but look at this squeeze in miners. This is GDX. Can you see this?
Yes.
Right. So gold definitely broke down, and it's not 117. This is an old chart from last week. It's now 114.90 this morning in GLD. Sorry. Right.
And the miners usually lead. That's why it was bearish gold, is when gold was 1360. The miners weren't close to their levels that they were at when gold was 1360. So now you're using GLD, so that'd probably be the 1290 area that you show up there. So do you have any levels where there might be a great contrarian buy setting up here in gold? Is that what the miners are saying?
There are 3 levels that I like. First of all, this is a little bit too technical, you know, for intermarket, but I'm just going to say this gold miner bullish percent index. I'm very fond of this because it helps me technically kind of put lines, if you will, on a chart, and then overlay that with Fed rate hike cycles, right? And you can see that there's absolutely a correlation between when the Fed hikes and miners, you know, increasing. So I'm basically, my thesis was trading gold and miners down into the next rate hiking cycle and then up. So that's first and foremost the macro backdrop. Second is I really would like to see this stabilize at 30. And then right now, anything on GLD above 115 is a buy, because that is very strong monthly support. The problem is if it breaks 115 decisively, then we're in some more pain. So it's a very big break. And for the yen, for those who trade ETFs FXY has been really one of my tells for trading gold, and obviously it's been going lower and lower. We're really not even safe until it gets back up above 87. So this fell out of that same kind of pattern, and this needs to get up above all of that to be a safe trade higher for FXY, yen, gold, miners. But right now, all eyes are on, no question,
the yuan.
Oop.
I want a yuan.
the dollar yuan carry trade. All eyes are on this puppy, no question.
Okay. Oil's been pretty wild. Any view on, is it untradeable now, or do you have some kind of view on, we've had a couple of real sharp setbacks, one from 72.80, one from a little over 75. Do you think there's another run in oil to the upside?
A bounce perhaps, but I've been short since July 5th. So,
okay.
And I'm only going to show you EOSO because I know it's not crude, but direct, but again, tradable ETF, which happens to serve kind of my active investment clientele.
They look similar.
They look similar, and I can do the pricing on my other platform, but for this one, so this really, when they, oil rally was over. And then, of course, this quote unquote bullish inventory that came out last Wednesday was not even close. So this to me looks like a great place for a bounce on weekly support. I will be bullish if it gets back above this level. Otherwise, I think this is rolling over and rolling over to the 200-day. So I think XLE is also, I'm short XLE, some plays within the oil and gas contingency. I'm also short CHK from this break. So I don't see oil going significantly higher. I think for this year, it's going to trade down into the midterm elections.
Interesting. Okay, I think we've covered almost every asset class, bonds, stocks, metals, currency, anything that we've missed?
Volatility.
Oh, that's right. Yeah, your original chart. Okay. So
we started on volatility. Let's end on volatility. So this, and I know this is very confusing for lots who do not, get crazy over lines, but I'm just going to kind of point out something that I'm looking for, which is that volatility chart that I showed you before is obviously elevated from the lows. That's VXV. This inverse head and shoulders is setting up for me. So it is completely negated, obviously, if it takes out these lows. But I really am looking at this as a potential very strong inverse head and shoulders. And I'm wrong, if it breaks. But I'm watching that, and that kind of goes back to that chart that I started with, which is, sorry, I know that's annoying. This little thing that I put together helps me, determine, if you will, if we have elevated volatility, backwardation, where we have risk on, risk off levels. And this also, to me, means very much, a happy portfolio is a hedged portfolio.
Okay, so the people that got tired of paying for insurance wished they had it in January, and then they probably started doing it again and said, oh, I'm not going to waste my money right when we're on the verge of perhaps even just to correct the recent drop from 28 to 13. What are you looking for if this turns? A challenge of those highs or a retracement of the high we had in Jan-Feb to recent lows, maybe a failing rally? Any ideas as to upside potential on the VIX? And is this the instrument that you use to trade? Because a lot of them have massive erosion.
Yeah, massive erosion, because it's not an investment vehicle. It's a trading vehicle unless you are short. And by the way, we're right back up to heavily record short VIX again. It's like we just had this experiment in January, failed badly. They're right back at it again.
I wonder which ECN will be defunct if we get another spike like we had before.
I'm sorry, say it again?
Well, we had, I think it was the XIV that ended up, that was the end of the contract after
Correct.
February.
I use VIV now as far as, sorry, this looks crazy up here. As far as a chart kind of pattern vehicle, if you will. So above 79 is going to be market melt up, but it has to get and close above 79, that kind of thing. So I use VIV instead of XIV now as,
Okay.
yeah, as a chart pattern kind of tool. But typically I'm trading VXX.
You're a champion, Samantha.
I just work hard every day. I'm trying.
Yeah, well, I know you're tenacious and passionate about what you do, and that's why I love having you on. And I think you wanted to talk a little bit about female traders or women learning how to trade. I know that's one of your passions. Do you have a message for the ladies in our audience that are watching us live or watch the recording later on?
It's a message for both men and women. So women in trading, we're very much, I would say, trading in the shadows. We exist, there's no question, but need to be, not just recognized, I think, but the light shared. So you already have seen my, tweets in this regard. We have demonstrated, our value, but it is still very early in the innings, if you will, of getting representation in everything from, only 2% of mutual funds, 12 trillion worth of are managed by women, and returns are higher by women-run hedge funds, but only 1 in 20 funds employ women. Melinda Gates is trying to, get the message of you're missing out by not investing in women. Less than 2% of VC money goes to women, but women make 85% of the consumer product spending decisions and control 70% of the financial decisions. So we have in financial services not evolved as, I would say, as well as, and there's still improvement in law and medicine, some other fields, but this is time. It is time. So even I have a Twitter feed that's only 9% women when they do their, analysis. What a shame. I want to change that. I want to obviously encourage strongly for finance platforms to actively promote women in trading, to make an environment that is nurturing is the wrong word, that is welcoming for women in trading, because most of these platforms, as good as they are, Seeking Alpha, Real Vision, StockTwits, they are still men caves, and you know what I mean.
I do. And I'll tell you something, if anyone can make a crack in the glass ceiling, it's you without even a helmet on. And you know what? I believe in your cause, because besides you, I've interviewed some very sharp female traders in my 1,000 interviews, and I wish there were more of them for me to talk to. But hurrah for what you're saying. It's true. And I'm in your corner and rooting for you. You're a great trader. You're a great ambassador for what you're trying to accomplish, Samantha. Congratulations.
Sincere thanks, and I really appreciate, and your contribution to encouraging, elevating, empowering women in finance and trading. It's going to matter. So thank you so much. I really appreciate it.
Well, I'm glad you went into the business, because your views are crystal clear. And why don't you show your website so people can follow you, both men and women, and anything I could do to support. I mean, tweet some of the women that you feel have leadership, and I'd be happy to give them some visibility in my Twitter stream.
You're wonderful. Thank you so much, and I wish you a very successful trading day. Okay,
so let's go fishing. This is Samantha's website. She uses a lot of fishing analogies, and I don't know, I've been hooked a few times, so I feel like a fish at I've had the hook in my mouth. So thank you so much, Samantha. I wish you a great summer trading season, and hopefully we can get back together in the fall and see how some of these things worked out.
Oh, I'll be honored. All right, thank you so much, and to all listening, have a great afternoon.
Thank you, Samantha. Samantha LaDuc, you could follow her at Samantha LaDuc, and you could go to her website at www.laductrading.com and learn how to fish with Samantha LaDuc. Okay, that's a wrap for us today. I see everyone for TGIF tomorrow. Good hunting the rest of the day, and see you in the private chat with Blake and the team. And don't forget, go to Forest Park FX and talk to Trent and Justin about what may be a better trading situation for you broker-wise. Adios, everyone, and most of all, remember, don't just count your pips, count your blessings. Adios. You're welcome. You're welcome.